Let me just tilt this up a tad. How are you doing today? It is Monday, September 5th. I almost said 4th. It is Labor Day. I hope you are having an amazing day. Make some memories, take some pictures. It is the official end of summer. So let me ask, I want to see some comments below. What was the coolest thing you did this summer? Let me know in the comments below. I want to live vicariously through all of you crazy animals. Hope you had a great summer. It is time to do the work. Look at your buy box, all of those amazing things. So before we get into the news, I need your help. Yes, I don't do this very often, but I need your help. This amazing book right here, One Rental at a Time, is currently sitting on Amazon with 974 5-star reviews. Do me a favor. I do a lot. I give you hours of my time every day, 7 days a week. I need 5 minutes of your time. If you have read this amazing book, I would like or ask, beg, whatever you want to call it, for a 5-star review on Amazon today. I would love to see this over 1,000 5-star reviews. There are not a lot of published books, self-published books with over 1,000 reviews. So please do me a favor. I'm giving you 2 or 3 hours of my life today because we've got some amazing interviews lined up. Please give me 5 minutes of your time. Write a 5-star review. Let me know in the comments below that you did it. I will thank you. Much, much appreciated. So again, 20, 26, 27 more. We go over 1,000. I think that would be quite an accomplishment. Next, we got more data from Redfin. Redfin said something happened in the housing market that hasn't happened since March of 2021. What is it? The average home last 4 weeks sold for less than list price. Now, Michael, doesn't that mean that housing prices have to crash? No, it doesn't. List price is a number. It's an opinion. We have to wait for all the dust to settle. There is no question that prices are crashing, falling, correcting, whatever you want to call it, in certain markets. We have not really seen the data at a national level. Remember, you, the person listening right now, should not care about median home price. You should not care about median home price in your state. You should not care about median home price in your city. You should care about daily activity in your buy box. Whether you are an investor or a first-time home buyer, you should have a buy box, and that is all that should matter. Do the work. Do the work. But again, Redfin saying that the average home sold for list price for the first time since March of 2021. Chief economist Daryl Fairweather. What a great name for an economist, Fairweather. That's just awesome. I think that's a great name. He wanted to talk about what is going to happen to the housing market post Labor Day, starting tomorrow. This is something that I have tried to articulate on this channel a couple of times, but let's look at what Daryl, chief economist at Redfin, had to say. Post Labor Day, the housing cool down, I say slow down, he said cool down, is going to look like this. 1, days on market are going to rise. I agree. Home searches are going to go down. I agree. The question is inventory. Daryl believes that inventory will rise. I don't think so. Now, again, my opinion is not popular. My current opinion is not shared by many. But I believe active listings across the country, I actually believe they're already falling. I believe by the end of September, which we are now in, we will see less active listings than August. And if interest rates continue to rise, we go from 6 to 6.25, 6.5, I think inventory gets even less. How can that be? Unfortunately, folks, what we are suffering through for the first time in 40 years is supply destruction. As rates go up, it makes less financial sense for move-up buyers to sell. As interest rates go up, empty nesters who live in big homes won't sell. They will say things like, Michael, I am going to just stay in my home one more year. We are going to have sellers who would like to sell, not sell, because there are no other options, or the other options are bad. The supply destruction that is going on right now is not being talked about enough. It is, in my opinion, the exact reason, it is caused by the Fed breaking housing. Right? You want to sell. It makes no financial sense to sell, so you don't sell. Don't get me wrong. There will be people laid off. There will be death and divorce. There will be job transfers. We will still do 3 million transactions, 3.5, maybe 3.9. So it's not like we're going to zero. But we're not at 6.9, 7.2, 7.3 million units. It is going down, crashing 50%. There were 3 markets. It is very funny. Redfin, if you go back and look 2 months ago, there was 1 market with year-on-year price declines. That was San Francisco, California. 1 month ago, it was San Francisco, California, and San Jose, California. This month, there are 3 markets with year-on-year price declines. San Francisco, San Jose, and Honolulu, Hawaii is now in the year-on-year price declines. Back to the last point from Daryl Fairweather, chief economist at Redfin. He believes, new listings are now down 16%. Last month, new listings were down 14%. So listings are decelerating. Remember, on this channel, we talked about July 20th being the date that the market changed. And we talked about 2 things. 1, buyers pulling away because they're scared, all the negative headlines. But remember, I told you about the sellers. The sellers were going to pile in, fear of missing out, wish pricing. It happened just like we talked about. What is happening now in September, what will continue to happen by September 15th and September 30th, is more and more sellers will cancel, pull the market, pull their listing. Brian Lebo, Las Vegas rock star real estate agent. He will be on the channel tomorrow. He and I talked, and he said, Michael, your thoughts about listings being pulled was right. Last year, I think I wrote it down. Let me make sure I did. Last year, Vegas averaged 293 cancellations a month. Call it 300. Last month, 1,377 cancellations. Let's call it 1,400. Folks, that is a 300% increase. Hey, Kip, how you doing? Thanks for the super chat. I appreciate it. Very nice of you. Very nice of you. So again, withdrawn listings, cancellations up 300%. I believe this is happening across the country. This is what I saw 2 weeks ago, and I started getting that icky feeling. Again, rising interest rates will pull inventory off the market. We will end the year with less active listings. As investors, it's great news. How can that be? What do you want as an investor? You want a great deal. As I have told you over the last 20 years, my best deals, my greatest deals have come from motivated sellers. Guess what's easier to find when there's less inventory? Think about a lake that is full of fish. You drain the water, the fish get into a smaller pool of water. That is what is going to happen as we get into winter months. Please, if you are thinking about buying an investment property, you are thinking about buying your first home, please do the work. Please get a buy box. Please write no list price offers, ask for closing cost credits, and rate buy downs. You as a buyer have all the power. Go get it. Las Vegas crash. Again, we will have Brian Lebo on the channel tomorrow. I watched his Vegas crash video. This is what I took from it. One, we've already talked about it. Cancellations are bananas. They are up 400%. This is how you distort active listings. You have undoubtedly seen channels talk about a housing crash because inventory is skyrocketing. Well, what happens if 15, 20, 25% of the listings are pulled in a month? Those were not real listings. They were wish pricing. That was a want to sell, not a need to sell. Next, Vegas transactions was the fifth worst month ever. 1,770 sales, down from 3,066 last year. That's a 42% collapse, crash, fall, whatever you want to call. It should be noted in Vegas, seasonality. This is important. This is important. The summer months of Vegas are generally hot. I mean, not, that's obvious, duh. Not hot weather, hot transactions. It's the winter months that are slow, specifically January. Of the worst 5 months ever, one we just had, one was May of 2020. The other three were January. So again, we have the slowest months coming. Vegas will be a very interesting market to talk about. I can't wait to speak with Brian tomorrow. Next up, because you all care about price, Vegas crashed, fell, collapsed, whatever you want to call it. Another 16 grand. Vegas is now down 49 grand, I think it is, in 3 months. Down about 10%, rough and tough. Brian Lebo thinks they could go down more. We will get that number tomorrow. Brian Lebo is very negative on Las Vegas. We're going to talk about this tomorrow. I am not nearly as negative. And again, I have no experience. I just understand math. So we're going to talk about that tomorrow. But Brian Lebo said the Las Vegas real estate market is in a race to the bottom. That doesn't leave you warm and fuzzy. It will be very interesting to talk with Brian tomorrow. Brian, if you're watching, buddy, thank you for coming on again. The channel loves you. Next, Bed Bath & Beyond, BBBY. I don't know if you saw this. It's sad news. I don't know if you knew this. I certainly didn't. It's not a stock I follow. It's not a craziness. But on this channel, we had Taylor from Greater Purpose Life. Anyways, my Monday guest. He talked about Bed Bath & Beyond. He talked about the unusual trading behavior that drove the stock up. There is now lawsuits against, I think his name's Ryan something. And if what I learned yesterday, also named the CFO. The CFO of Bed Bath & Beyond was a named person in a lawsuit. And yesterday, folks, he committed suicide by falling out of a 12-story building in New York. Sad, sad, sad news. Don't do bad things. Don't run Ponzi schemes. Don't run pump and dumps. Don't do any of those things. It's not worth it. Next, OPEC. How about OPEC coming out with a surprise announcement today? They are cutting production. If you remember, President Biden flew over there, begged for more oil. They ramped up. Oil has been crashing. So OPEC said, that's enough. We are cutting production. Again, cutting production into the winter months with Europe, and it's probably not what we wanted to hear, but yes, OPEC is cutting production. Got more data on this zero down loan program by Bank of America. Again, from my experience, it's not the first exotic loan program that is the problem. It is when we get copycats. It's when everybody offers zero down and we get wave after wave of approved buyers who can't afford it. That is, first off, how prices explode. It's how affordability falls and how REOs or foreclosures spike years to come. So, first off, Bank of America, zero down, no minimum credit score, zero closing cost or no closing cost. As of right now, Charlotte, Dallas, Detroit, Los Angeles, and Miami. As of right now, Bank of America is running a test in those 5 markets. Once again, Charlotte, Dallas, Detroit, Los Angeles, Miami. They reserve the right to expand it later, but right now it is only 5 markets. Bank of America's zero down loan program it's not big enough to cause a national real estate bubble, but if it takes off in these markets, like let's take Detroit. From my knowledge, my limited knowledge, Detroit is the cheapest market. It's certainly cheaper than LA, Miami, Dallas, and Charlotte. It's the cheapest of those 5 markets. So let's play this out. Let's say over the next 9, 12, 18 months, Bank of America's zero down, no minimum credit score, no closing costs, no mortgage insurance. I forgot that. No mortgage insurance. Let's say that becomes the dominant loan product for Detroit. What happens? I'm not saying it will become the dominant loan program. I am simply saying, what if? What if it does? Well, you are going to create thousands, tens of thousands, potentially hundreds of thousands of new buyers. Buyers. Why? Hey, it doesn't cost me anything. No down payment, no credit score, no minimum credit score, no mortgage insurance, no closing costs. Sure, I'll apply for a loan and try to buy a home. What will happen is you create artificial demand in Detroit, in this example. Prices then go up for first-time homebuyer homes. They keep going up. Why? No supply, excess demand. Prices keep going up and up and up and up. They go up 10, 20, 30%. Suddenly, it's not affordable even at zero down. Suddenly, people start losing their jobs. They start losing foreclosures. And 2, 3, 4, 5 years from now, you have waves of foreclosures. Now, again, I'm not saying this is going to happen. I'm simply painting a picture of how it could happen. What else do we got going on today? Oh, did you know what it takes to be in the top 1% globally? This is according to Fortune magazine. In order to be considered in the top 1%, actually, I think this is in the United States. I stand corrected. I do not think this is global. I think this is in the United States. I stand corrected. 1, a minimum net worth of $11.1 million. If you are worth 10 million bucks, you are not in the 1%. It has to be 11.1. 2, if you make $823,000 a year, you are in the top 1%. And then lastly, the top 1% pays 40% of all federal taxes collected. I think that's wild. It's awesome. It's still wild. It's kind of crazy. And then finally, lots of talk about a wealth gap. I want to be very, very clear. It should be called an asset gap. It's an asset gap. Getting on the property ladder, low down, house hacking. If you own assets and can afford them, and if they cash flow or you house hack and you don't have your living expenses, that is how you gain wealth. by owning assets long term. All right, everybody, it is Labor Day. Remember, my favor, I'm begging, I'm pleading, help me out. Let's get this great book to 1,000 Amazon reviews. It would be greatly appreciated. Remember, if you want to change your financial future, How to Get Started One Rental at a Time is a great course. Join the private Facebook group. Take care of yourself. Have a wonderful day. Bye.